When I first bought my 12-unit apartment building in Washington, D.C., I was overwhelmed. I really was. I mean, I had flipped like 30 houses at this point, so I was no stranger to houses and getting hands dirty and stuff like that. But this is a, 3-story brick building. And when I first put on a contract, man, I was nervous as could be. I mean, I was like, oh my gosh, am I doing the right thing? And I got into due diligence, and she took a while to get the documents back. So time passed, and I could kind of calm down a little bit. Once I got all the documents, and I'm there, and I have to go there and meet a contractor, and I'm walking around. It's just becoming so much more real to me that after about 2.5 weeks into it, I was like, man, I wish this thing were bigger. And I learned through the process that it's actually not much more work to do purchase a building 2 or even 3 times that size. The work is about the same. It takes maybe a little bit longer. But here's why bigger is better. I'm going to give you 5 reasons. Number one, it's a much better buying experience. Okay, now this was a relatively small one, and the owner was, it was a wife, and her husband had passed away. They owned a little bit of property, and she was divesting herself of that. But if you're buying properties like quads, duplex, and stuff like that, these are just mom and pop people. They're not sophisticated. They're not going to talk to you about cap rates and net operating income and stuff like that. They're not going to have very careful records. They're not going to keep careful records. So when you request them, they either missing or they're incorrect. It's a very frustrating experience. There's a lot of emotion involved. Okay, no, we paid this much, so and so Harry down the road got this much, and I want that, and I owe this, and they're just much more emotional. You compare that with the experience of a larger building. For example, I'm negotiating. I have under contract a 51 unit right now, and you're dealing with a much more sophisticated investor. When you say, hey, your cap rate is too high, your net operating is lower, you're speaking the same language, and there's much less emotion because to them, that's just investment. It's about money and return. And if you talk in that language, there's a lot less emotion involved. They also have much more records. They have the P&Ls, they have the rent rolls, everything that you have that you normally should have, they have. So this is reason number one to try to go bigger and bigger. So it's a much better buying experience. Reason number 2 is economies of scale. For example, your property management goes down as a percentage of income the larger the property. So for example, a single family house, if you have a realtor or someone managing that, they'll normally take 10% of the income, which is a lot on a house. And as a result, most people just say, I'll do it myself. If you get to a larger properties, like say 75 units or so, the percentage goes down to say 5% or sometimes even lower. Now there's some payroll that comes in there, but you'd have that anyway, regardless of the fee, but the fee starts going down. So you start getting economies of scale. Also, some of the other things like trash or insurance start to decrease as a percentage of income the larger you get. Reason number 3 is you actually have less closing costs, and that is because as a percentage of the deal size. And that is because a lot of the closing costs are actually almost like a fixed cost. They're not variable based on the purchase price. They're a fixed cost. Like, for example, paying your attorney to create a private placement memorandum or operating agreement, anything like that. Yes, they may charge you more for if the deal size is much larger, but there's not going to be a lot more. So the larger your deal, the cheaper the attorney will be as a percentage of the size of the deal. The same thing goes for your lender. Your lenders also charge you attorneys and doc prep fees, which essentially are fixed. The appraisal is essentially fixed. I mean, my gosh, for the 12 unit, I paid $2,500 for the appraisal, and asked the guy, hypothetically, what would it cost for a 50 unit? He goes, like $3,500. So the appraisal is almost like a fixed cost, and so so that's a third reason. The closing costs are going to be less. All right, here's reason number 4, better financing. Smaller properties, you're going to have to personally guarantee that loan. And typically, loan balances above $1 million, your chance of getting a non-recourse loan, one you don't have to personally guarantee, is much, much higher. And below that, it's much, much lower. So you have to guarantee that loan. And you may actually be able to do less loans at the same time. So it's kind of counterintuitive. Also, the cost goes down. The interest rate goes down, the points sometimes are lower, and the reason is, for a lender, it takes them as much work to do a $750,000 loan than it does a $3 million loan, right? They make much more money in the same amount of work. So you actually get better financing. It's amazing. And reason number 5, of course, is profits. If you can add a 0 or 2 at the end of everything that you're doing, you're going to make more money as well. So number 5 is more profits. Now, here's the objections to all this stuff is, okay, I get it. But here's the thing. I need to raise more money. I don't have the money. I need to raise the money or what? I can't do this deal. And so the answer, of course, is yes, you are right. You need to raise the money. But I have written extensively about that. I have the free ebook about this. I have podcasts and YouTube videos on the subject of raising money. And this is really the answer to everything. Now, that means you'll have to raise more money. And it means you may have to speak to more people to have the kind of money that you're looking for. And it might take longer. But shoot, let it take 12 months. Let it take 18 months. Okay, if you can get yourself into a 50-unit building in 18 months, would that be worthwhile? Do you think that it might go quicker the second time around? Yeah. What if you're on a 5 to 10-year retirement plan? Is 18 months any issue at all? No, it's not. Not at all. So you really need to kind of get over the biggest obstacle that you'll face in this, and that is yourself. And our little brains tell us that we can't do certain things, and it's just not true. You need to say, I can do these things, and you need to start doing it. All right, so bigger is certainly better in regards to investing in apartment building deals. And if people ask me, hey, should I do a smaller deal before a bigger deal? And they usually mean going into single family houses. And I'm like, don't do that. For me, I did 30 of them. I had lots of single family house, and I don't really think it prepared me that much for apartment building. And hardly any of my investors decided to invest with me in apartment building. So I didn't really feel it as a valuable stepping stone at all. I'd say if you're going to go in apartment buildings, go right for the first building you should do somewhere in the 25 unit range. Skip the duplexes and the quads, 25 units. Because if you can do 25 units, which is not huge, very doable, it is your second deal could easily be 100. If you do a quad, going from a quad to 100 is a bit of an unnatural step, but going from 25 to 100 is very doable. So bigger is better, and in this particular regard, and so that's what I advise. Just get it right into the 25 unit as quickly as you can. All right, thanks for listening, and see you in the next episode. Hey there, and thanks so much for sticking around to the end of the video. I want to give you 3 things to do in sequence. Let me give you a quick tour of what those 3 things are, and then I'll show you how to do them. Number 1 is to download my free ebook called The 10-Minute Offer. It's all about making offers quickly, accurately, to give you confidence about analyzing deals and making offers. So that's the first thing. The second thing is to subscribe to my YouTube channel because I put out new videos all the time, and I want you to make sure you get them. That's number 2. Number 3 is to watch the next video in line. All right, so I'm going to go give you a chance to do that right now. And when you click on one of these things, a new tab will open up, and for the ebook. Okay, so click on the ebook, and new tab will open up. The video will stop playing. You can go back to the video and click on step 2, which is subscribe to the channel. That'll open up a new tab as well. And then 3 is when you click on the last one to watch the next video in line. That'll open up in the current window. All right, I appreciate you guys, and I will catch you in the next video.